Wow, really big news today. Warren Buffett is going to step down from Berkshire Hathaway at the end of the year and hand over the reins to Greg Abel. And so Warren Buffett has had a 60-year run with Berkshire Hathaway. So what does this mean, number one, for Berkshire Hathaway stock? Is the stock going to go up or is it going to go down on this news? And I'm sure there's a lot of conspiracies on why Warren Buffett was hoarding the cash at Berkshire. Was he doing that because he knew he was going to step down and let Greg Abel run it? He answered that question today, so we're going to take a look at all of that. Also, I'm sure some people think that maybe Warren got out now because he sees some big financial crisis coming down the pike soon. Who knows? So let's take a look at the news. So here on Zero Hedge, it says Buffett is stepping down and the Berkshire hoard is now at a record $348 billion, up from last quarter. And just to give you a perspective of how great his track record was, they compounded annual returns to shareholders at double the rate of the S&P. So 19.9 versus 10.4 since 1965, or 5.5 million % overall gain on Berkshire stock since 1964 versus only 39,000% for the S&P 500. Now, 20% a year doesn't sound like a lot, but compounded over 60 years versus 10% a year, you see what a huge difference that makes. So here's a look at his performance versus the S&P 500 starting from 1965. And most of his outperformance were in the earlier years. As he got to the later years, they got so big that they basically started looking like the S&P 500. So his returns were kind of similar. Now, at the shareholders meeting, when he said he was stepping down and he wasn't going to sell a single share, Buffett got a standing ovation from the crowd.
I will not. I have no intention, zero, of selling one share of Berkshire Hathaway. It'll get given away gradually. It just won't. Thank you.
So is Berkshire Hathaway stock going to go up or down on Monday? Well, if you go by what Warren Buffett has been saying, it will likely go up.
If Berkshire stock falls to a price where share repurchase is attractive, can we count on the board and top management to repurchase shares?
As far as I'm concerned, they're not taking advantage. I think the stock is more likely to go up. If I died tonight, I think the stock would go up tomorrow. And there'd be speculation about breakups and all that sort of thing. So it would be a good Wall Street story that, this guy that's obstructed breaking up something where some of the parts might sell for more than the whole. They wouldn't necessarily probably be worth less than the whole, but might sell for temporarily for more than the whole. And it would happen. So I would bet in that direction. But if for some reason it went down to a level that's attractive, I don't think the board is doing anything in the least that's reprehensible by buying in the stock.
So you see, he thinks it will likely go up because of speculation about Berkshire Hathaway getting broken up into its pieces and being able to be sold off for more than the sum of its parts. Now, a breakup wouldn't be possible for a number of years, even if he died tomorrow, because of the way that his trusts are structured. So he says it will be 10 to 12 years before that stock is in a bunch of different hands that it would even be possible. But a stock like Berkshire is so big that who would be able to swallow that or break it apart or have the money to do that? Not a lot of people, most likely. So ahead of today's meeting, they reported the first quarter results, and there was a steep drop in operating earnings from the year earlier period. And it says much of the company's decline was driven by a 48.6% plunge in insurance underwriting profit, which was only $1.34 billion for the first quarter versus $2.6 billion a year ago. And that was mostly due to the Southern California wildfires, which led to a $1.1 billion loss. And then there was also a $713 million loss related to foreign exchange. Right? This time last year, they had a benefit from foreign exchange of $597 million. So that goes up and down based on the dollar. And so the overall earnings plunged by 64% year over year, but that's mostly because of the publicly traded stocks that Berkshire owns. They have to mark them to market. So as the stocks went down at the beginning of the year, then that is marked lower. So Warren Buffett always said the amount of investment gains and losses in any given quarter is usually meaningless and delivers figures for net earnings per share that can be extremely misleading to investors who have little or no knowledge of accounting rules. So yeah, nothing catastrophic in the earnings or anything like that, just basically regular business of some losses, some dollar losses for foreign exchange and things like that, but nothing catastrophic or anything like that. And they did talk about tariffs a little bit, and he said that trade should not be a weapon, and that you can make some very good arguments for the fact that balanced trade is good for the world. And he said, there's no question that trade can be an act of war. He added that U.S. should be looking to trade with the rest of the world. Right? Balanced trade is good for the world, and the more balanced that trade is, the better. And so Berkshire's cash hoard ballooned to a fresh record, rising to more than $347 billion from around $334 billion at the end of 2024. So they hold $305 billion in treasury bills, which means that Buffett didn't buy anything in that first quarter drop in the stock market to deploy that money. Now, as for all the money they've been hoarding, did Warren Buffett do that in anticipation, knowing he's going to step down and just sell a bunch of stock to give George Abel a big hoard of cash to start off kind of his new career or his legacy? According to Warren Buffett, he is not that noble of a person to do something like that to give George Abel a leg up. Let's listen.
Berkshire's balance sheet for a smoother leadership transition, providing Greg Abel with maximum flexibility and a clean slate for future capital allocation decisions. And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
Yeah. Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good later on. Now, if he gets any edge when I leave, I'll resent it. So the amount of cash we have is we would spend, well, we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make. When something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. The long-term record is sensational, but that is not a product. And I've had 200 trading days times 80 years. It's 16 million trading days. We kind of, 16,000 trading days. It would be nice if every day you got 4 opportunities or something like that, and and they were expected to be equally attractive. If I was running a numbers racket, every day would have the same expectancy of that I would keep 40% of whatever the handle was, and so the only question would be is how much we transacted. But we're not running that kind of a business, and so we're running a business which is very, very, very opportunistic. And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50, and that we never concentrated enough. So that we would rather have, if we've got 335 billion now in treasuries, we would rather have conditions that have developed where we would have like 50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper, actually.
Yeah, so basically Buffett's saying, I just started hoarding cash because I didn't see any good deals, even though he did talk about a $10 billion deal that they were discussing recently, but I guess they didn't pull the trigger. But he said that if he found some great deals tomorrow, he would do it, even though he's stepping down in a year or whatever. So he just likes playing the game, and he's not going to stop until he actually steps down. So if there are deals to be had before he steps down, he's going to take them. If not, he's going to hand the cash over to George Abel and let him wait for the deals to come to him at the right time. And when is the right time? Well, he doesn't know, but he knows that right now is the right time to be hoarding cash, according to what he is seeing. So this is the record cash holdings of Berkshire Hathaway going all the way back to 2010. And as for their net purchases or sales of stocks, they are still selling stocks, although not that much. The net sales are very small compared to, say, June of 2024. But you see, they're not going into stocks big like he did here in 2022 or some of these other years, 18 or whatever. So they're still waiting for that fat pitch. Now, if he can't find anything to buy, why not buy back Berkshire Hathaway stock, right? Well, according to Warren Buffett, Berkshire Hathaway stock is too expensive. Now, he hasn't said that, but you don't have to listen to what he says. Watch what he does. He has all that cash. If he thought Berkshire was cheap and that it would yield more than the treasury bills that he's sitting on, he would definitely be buying back Berkshire Hathaway stock like he did in 2020, 2021, and all of those times. You see, the buyback stopped in around June 2024, and they haven't bought back any in almost a year. So what does that tell you about how overvalued they think Berkshire is, and probably other stocks out there that they're considering buying? So guys, I don't think there's any big grand conspiracy that Buffett knows that the stock market's going to fall 90% in the next month or something like that, and he's getting out at the top. I think he's just getting old. He hit 60 years doing this now, and you could see that he's definitely slower in his talking, and even in one of the calculations that he made in the video, he says that he's been doing this for 80 years and there's 200 trading days in a year. And so he calculated 200 times 80 and came up with 16 million at first instead of 16,000. And he corrected himself a few seconds later, but I would think that when he was at the top of his game, he wouldn't make mistakes like that doing calculations in his head. So it could be nothing. It could be just a sign that he's slowing down and he's ready to hand the reins over to somebody else. And if I remember correctly, after the great financial crisis, the big investor, Kirk Kerkorian, he had casinos and he was kind of like a corporate raider type of person. His investments went down a lot during the great financial crisis, and I'm sure they recovered later on or whatever. But I remember him saying something along the lines of, I think I've lived too long, meaning he would rather have died before all of these stocks and stuff went down and, you know, made his investments go down. And he died a few years later after that, 2015. I think he was like 95 years old. So maybe Warren Buffett's thinking like that as well, like kind of, okay, I did this for 60 years, go out at the top and let the next guy give him a boost of the cash and let him start, because there's probably going to be another crash coming, and let him scoop it up and kind of make a legacy for himself and help out all the Berkshire stockholders that are still holding on, so that it gives them kind of a good idea that, hey, this guy is also able to do what Warren did, buying stuff cheap when there's blood in the streets. And so let's hold on. And that will help Warren in the people that he's giving the stock to, because he doesn't want Berkshire stock to go to zero after he's gone. He wants it to continue for a long time after. So guys, let me know what you think. Do you think the stock is going to go up a lot or down a lot on Monday, or just kind of a little bit of nothing? And do you think that if you are a new investor, maybe 20, 30 years old, and you're looking to invest for the next 20, 30 years, do you think Berkshire is a good investment for you, like it has been for people who invested 30 years ago? In other words, are there still good days ahead for Berkshire, or are the best days behind it? Let me know in the comments. Thanks for watching, guys.